without any further ado, we are going to move to the supply, and I would like to invite Marc Howlett, Head of Fleet and Remarketing at Kia Motors Europe. Marc, thanks for being here.
Hi, Johan. How are you doing?
I'm okay. Everything's fine from your side so far?
Yeah, so far so good.
Okay, good. Marc, we're going to launch a Slido question for people. So we're going to jointly have a look. So if you take your phone and you scan the QR code of the attendees, we're going to give you a bit of time because it's the first one you do. And then you can actually choose one of the 5 options. And we'll have a look what you think, whether we will stay in short supply for a while, or whether it will be more balanced, or that we are going to move into an oversupply quickly, which would mean that we will need to start and push again. So first answer is in, but then, of course, others will come in as well, and we'll see where this moves to as an input for all other expert speakers as well. So still quite a lot of balance between, or most of them stay in the short supply so far. Okay. No one still believes that there's going to be... some start to be slightly concerned that there might be oversupply and start to push. Okay, good. Just as an input for our discussion so far. So, Marc, talking about this, I think in general the last months, 3 or 4, I think we hear signs that new car supply gets slightly better. Not for everyone, not probably in every car line or in every power train. But what are your thoughts and outlook a bit for what's coming?
Well, it depends where you're coming from, which brand, of course. But for the industry overall, I would say certainly it's feeling and looking more positive versus 2021 and 2022 for sure. We start to see some good numbers from OEMs that were struggling in the previous couple of years coming back, which is positive for the industry, positive for the customers. 2022 for Korean brands in general, speaking on behalf of my own company, was very positive, actually. I mean, we grew the business by 8% from 2021 and gained a bit market share. And this was, again, consecutive growth year over year. I would say partly related to the supply situation of competitors, but also largely driven by the push for electrification. So those brands that were having good electrified options, good battery supply and reasonable component supply, maybe also rationalizing a bit the lineup to focus into core trims and simplify the options, were probably the winners of the last 12, 18 months. And the likes of ourselves, Hyundai, also Toyota, to be fair, had pretty good years last year.
Yeah, because actually you say you were quite, you were talking about a share increase, but if I look at numbers, you've increased your share with 50%, which is not just small. So is this due to most of its supply situation, or is it also that you had a different strategy versus, let's say, supplying fleets even? Because we heard from fleet operators a lot that they were struggling, that not everyone was as loyal almost. So where does the increase come from?
It's certainly a combination of factors. Those brands, like I mentioned previously, that are further down the road in their electrification story have certainly, let's say, won some market share, gained some momentum. I think we saw in the last financial crisis, whenever there's a big disruption in the industry, we see a bit of a shift in the supply base from maybe traditional ICE focused in Europe anyway, OEMs, to those that were maybe more into the electrification story, having broad lineups, competitive pricing, and not impacted by certain, let's say, climate disasters like some of the Japanese brands in the late, let's say, 2008, 9, 10 period. And the Korean brands have done quite well in this period. And we now see even some additional new entrants into the market coming for the electrified marketplace as well. And particularly some of the Chinese brands are coming to Europe in reasonable numbers. And it feels like another shift in the marketplace. Again, going back to your question about the doubling of the market share, it's true. 2019, we were a 3% market share brand. We now take around about 5% market share in Europe, and Hyundai the same. So the Korean brands are taking almost 10% of the European market. And that is a combination of investment into the product, having a broad lineup, both brands having 12 to 15 cars in the lineup. We also have commercial vehicles on the horizon coming as well. But it's also been an evolution in the quality of the products. So it's not just about having products per se, it's about increasing the customer perception of the quality, reliability, and obviously our warranty offering has helped into this space as well.
But as you start to talk about customers, how have you been able to handle fleets? Because it must have been a challenge to have almost a kind of fair allocation. We've heard from some fleet operators that they were saying it was really unfair. Of course, we know that fleet and short-term vehicles is much more challenging from a discount point of view and everything. So how hard was this to handle for you?
It's been extremely challenging. And as you can imagine, for a brand like Kia selling something in the region of 500,000 cars in a year, we were having north of 250,000 back orders, customer sold, at a certain point last year. Now, this is down a little bit, but we're still above the 200,000 sold back orders status, which brings various challenges, both in terms of what channels to place the volume, the shorter term or the longer term. Naturally, the longer term channels and private naturally is a bit more profitable. And we have to take these factors into consideration. But we also have long-term loyal customers that have been very good, let's say, ambassadors of the Kia brand for many, many years, which brings some challenge. You don't want to leave those customers out in the cold. And I'm particularly now looking at the short-term rent-a-car providers that we've built very, let's say, credible, long-lasting relationships based on trust with over many years. And this sector was almost decimated in terms of new car supply, particularly in the last couple of years. We start to see some volume going back into these channels, and we have, as a brand, tried to maintain a bit of business continuity into some of our key partners in this area. And traditionally, we're not a big player into the short-term rental market by any means. And I think currently only approximately 3% of our business total is in the shorter-term channels. But nevertheless, this 3% of volume is critical for those businesses that we give it to. So it's been hugely challenging, and we've had pricing discussions around volume caps, and basically a lot of managing of expectations to ensure that we don't overpromise in terms of the lead times. And it does vary based on the model, based on the powertrain. And as you probably would expect, the electrified products are in high demand, longer lead times, and the ICE less so, which also brings with it some challenges.
Okay, now we'll hear from the experts afterwards. But what's your stake a bit on future values? Of course, no one knows the answer exactly, but what's your idea about forecasted RVs for the next years?
From our side, we still see a shortage of used vehicles in the marketplace for a period, particularly in the younger used car area. As we discussed, the rental business has been starved of supply for quite a period now. Also, the longer term, let's say leasing vehicles, end of lease contract extensions have led to a shortage in the 3 and 4 year age profile vehicles as well. And we see largely the increase in transactions for used cars has been in the very, very old profile vehicles. And we still think that this will continue for a period. This said, there are certain challenges in the finance markets at the moment. Interest rates and inflation put pressure into the private space. So a flattening off maybe of the order bank into certain channels for a period, particularly whilst we've got a lot of the volatility with the Ukraine situation and so on and so forth. So we do still see a period of short supply. It might be eased by a, let's say, flattening off of demand to a degree, but we must also put on record that there's still a large back order of vehicles to supply. And our company alone is sitting on more than 200,000 back orders to supply, and I'm sure it's the same for many of our competitors.
Yeah. Okay. Thanks for this. Maybe a final one. What's this year gonna be for you? Is there anything specific you really look forward to from a Kia perspective or personal perspective?
Personal perspective, surely some sleepless nights. My partner and I have just had a baby boy.
Congratulations.
So, a 5-month-old keeping us awake at night. So this is the immediate project, let's say. But for Kia in general, lots of opportunities to introduce some fantastic electric vehicles, new models as well to existing and new customers, namely our all-new EV9, which we're going to be launching in the autumn of this year, which brings a lot of technology and our all-new EGMP platform into the large SUV segment, where there's not a lot of competition for fully electrified vehicles. So this will be very exciting for us. And then, like I said, just engaging with our very, very patient and tolerant customers about when we can bring their vehicles to them, and hopefully sooner rather than later.
Okay, Marc, thanks a lot for your support here, for the explanation. It was very interesting. So I'm hoping you can get some sleep the next days, weeks. And we're looking forward to your EVs this year, certainly. Thanks a lot, and I'll see you next time. Thanks.
Perfect.
Bye.
Great talking to you, Johan.
Thanks.
Ciao.